And silver and gold have gone into this sort of flip-floppy mode, but they've not given up their turf. You can just basically draw a line sideways for the last 6 weeks or so, or 7 weeks, where they've gone up and down, but held their ground. Okay. Now, once they engage again, where are they going to go on that first leg, possibly? And that's what we tried to measure via certain momentum metrics. We come up with two swing objectives. One for gold is about 2,400. And of course, we're trading, above 2,000 right now. So you're talking pretty good percent. But on silver, which is trading 25, 26, we think it could go to 34, which is a much bigger percent gain than gold would have.
Michael Oliver is the founder of Momentum Structural Analysis, a firm that provides unique technical research on stocks, commodities, debt, and foreign exchanges to banks, hedge funds, mutual funds, and other top players in the financial industry. The firm uses Oliver's momentum-based method of technical analysis, which he began to develop in the 80s after realizing that traditional price chart analysis had too many loopholes and was often deceptive, especially for investors who depended too strongly on support and resistance levels and price chart breakouts. Oliver's style is tracking momentum, thereby revealing built-up trends. According to the momentum analyst, this method, rather than unhealthy fixations on an asset's price, has much more depth and staying power. Oliver has been in the financial industry for almost 5 decades, first starting his career on the futures side in 1975. Since then, the momentum analyst has risen through the ranks and is now a respected voice in the industry, especially for gold and silver investors. The legendary analyst and investor recently appeared on the Liberty and Finance channel, where he discussed his outlook for gold and silver amid the chaotic economic trends in the United States. According to Oliver, gold is due for a massive breakout, but nothing compared to what he projects for silver. During the interview, Oliver noted that gold and silver prices have held steady over the past year, even as the stock market and other assets plummeted sharply. Now, the momentum analyst believes the stock market is due for a steep correction, which would, of course, drive investors toward commodities like gold and silver. According to Oliver, the price of silver, when expressed as a percentage of gold, is at record lows with a lot of room to grow. As such, he expects silver to easily outperform gold when the breakout begins. We will now bring you clips from Michael Oliver's interview with Liberty and Finance. Please watch the video to the end, subscribe to the channel, and turn on post notifications so you never miss any of our subsequent uploads. Thanks, and enjoy the video.
We turned positive in phases as it turned up out of that summer low last year, September low last year. Silver sort of led the way, actually. Silver made its low about a month before gold did. And the percent gain from the low, silver gained more than gold. Even though silver's not back to its highs like gold is. In fact, gold's nipped a new high, by the way, recently, new intraday high. Silver still had a bigger percent gain. Now, when we just look, our expectations are more or less off the page. As I've explained before, gold has had 3 bull markets in the past 45, 50 years that have gone up 6-fold to 8-fold. 2 of them are 8-fold, one of them was 6.5-fold. Measured from the bear low that preceded the bull to the bull peak. Okay, so it's done it 3 times, and we now have a global and certainly a U.S. economic environment in which a bubble is breaking, especially in the U.S. Our stock market had the biggest bubble in its history, and when it breaks and unwinds after a dozen years of free money, and the errors that have been based on free money, family errors, business errors, state spending, governments, etc. Those errors are going to come to the surface in real terms. Forget stock market, okay? It's going to hurt people. It's going to be one of the most dangerous events we've ever seen, and also one of the most profitable if you're on the right side. The central banks will have to respond to this. They can talk all they want to about, quote, fighting inflation, which I cheer them. They have. They've busted the inflated stock market bubble. Okay, they broke it good, and it's going to go lower. And I think all we've seen for the last 9-10 months is floundering by like the U.S. stock market in the lower half or lower third of the price zone from the 2021-22 peaks to the 2022 lows. We've been floundering with repeated rallies. Okay, now once that rolls over, the metals knew this was going to happen. That's why they didn't break down in 2022. Gold was unchanged. Silver had a 2-3% up year, while everything else was in the tank double digit. Now we've broken out further. Silver's gone up to 26. It's now trading in the mid 25s. Gold went up back up to its highs. And then we asked ourselves the question, okay, now if gold hit another eightfold, it'd go to $8,000. Why? Because its previous bear low was just under 1,050 in late 2015. Okay, but you're not going to do that overnight. You might do it pretty quickly, more so than the prior bull markets. But I doubt you're going to do it in 3 months. Same with silver. We think silver's going to now outpace gold, and that's the place to be. But what about where might the first pause point be? Given the positives that have already occurred so especially since early April, we had our final breakout on silver. And at that point, you say, okay, now you've broken through major momentum hurdles, including some price chart hurdles that we've defined. And since then, you got overbought in doing that. The old silver gold ratio is, silver's at one time was 6.5% of the price of gold. That's back in the mid 70s, I think it was, or 1980. And then there have been repeated times over the last 40, 50 years where if you plot a spread chart, the monthly close of silver, the monthly close of gold, what percent is the price of silver expressed as a percent of gold? So many times it's been at 2.5% to 3%. It's almost normal. Okay, so let's just take that zone of upper readings that have occurred, half a dozen times in the last 40, 50 years, where silver gets up to 2.5% to 3% of gold. Right now, silver is 1.3% of gold. Okay, so silver ratio to gold could double and get to a sort of normal spread ratio that it's seen plenty of times before, and it certainly has an excuse this time around to do it again. Okay.
Oliver is not the only analyst predicting a bigger breakout for silver than gold. According to a recent analysis from FBS experts, the current gold to silver ratio is 80, meaning that, at over $2,000 per ounce, gold is around 80 times more expensive than silver. The historical range is about 45 to 30 to 1 ounce of gold. The report also suggests that a recession is imminent in the United States and the European Union. Even with inflation decreasing, there are still lots of headwinds to expect for the United States economy. Like Oliver, FBS experts also predict that gold will jump to $2,300 or $2,400. On the other hand, they expect silver to hit $31.9 or $39.64, a 30 and 62% increase from current prices, respectively. Let's get back to the interview, as Michael Oliver gives his outlook for gold, the U.S. economy, the stock market, and the banking industry.
Well, let's say gold did another normal eightfold bull market and got to 8,000. Well, 2.5% times that or 3% times that's incredible. A couple $100 silver. So on a percentage gain basis, even though going from, let's say, 1.3% to, let's say, 2.5% doesn't seem like much, it's huge in terms of silver's potential to outperform gold. So that's why we're more focused on silver than gold. We came up with a number that was actually it's 23.95. Okay, all it is when you go back and look at a certain oscillator high reading on momentum now, not price, that we made in that very dramatic surge in April, May, June, July of 2020, gold got X% above a certain long-term moving average that we're monitoring. Okay, forget the average, it's the distance above it. How high did we get in that explosive surge? Well, if we simply replicated that and went back to that high and had problems there, in other words, where momentum said, okay, I'm back to an old high, I think I'll pause. Well, if you do the math and you go out, a couple months and assume it might happen then, you come up with 23.95. Okay, which is well above all the price highs we've seen since 2020. By the way, that intraday price highs have been 2070, and recently 2080. Okay. We've already made new high monthly closes for gold, new high weekly closes, and new high daily closes. We just haven't exploded well beyond that level yet. I think that's probably coming. And I think in order to help determine that, one thing investors should look at is out the side mirrors, not the front windshield. Yeah, you can look at gold and silver all you want and measure them and day by day and get fretful or get happy, whatever you want. But look at some of these big asset categories that will definitely influence the underlying reality and hence the Fed. Gold, I think, knows what the central bank is ultimately going to end up doing. And that's going back to print, print, print. Why? Because it's going to have to. It's going to have a disaster like it's never seen. And by the way, we said this a year and a half ago when we called the top in the S&P and the NASDAQ. It was February of 2022 for S&P, January 2022 for NASDAQ 100. We argued the first leg would be an arm wrestling match. It was. A lot of zigzags. We're still in that first leg. The second leg we think will be more serious. And that's when disappointment among the still excited investors out there who think, oh boy, we've got a bottom here. We've got to buy this, because Apple went up good, or Microsoft went up good. Of course, they're weighted so heavily that, they could go up good and 90% of the market go down and the market would still go up because on the index, they're weighted at double digits. But anyway, so we're focused on certain aspects of the stock market that once we see them start to roll over again, we think the market will go. We're watching Apple and Microsoft because they're two of the stellar, extremely heavily weighted symbols in the S&P 500 and in the NASDAQ 100. So as they go, so will the market, and so will sentiment, because they've been the hope-filled symbols. The other sector that we nailed was back in late January with the banks. We put out a couple reports and warned that even though banks had been behaving much better than the S&P 500 ever since mid-2022, banks made their low in June 2022, just like S&P, and had a rally. But S&P and NASDAQ went down and took out that low in October. Banks did not. So banks held better on the downside. And then when we turned up for the rally late into the year and into January this year, I think it actually extended into February, that rally was stronger than the S&Ps as well. So if you were a, quote, portfolio manager looking for the best places to be, you would have favored banks. And that was true up to that point. But our work on momentum said that, no, watch out, something's going to happen here. We're going to get ambushed in this good sector. And if it goes, watch out, because it's too critical. And sure enough, it went.
Silver acts as a lagging indicator for gold, often offering more volatility compared to the more stable gold. Historically, when the spread gets above 80, silver doesn't just outperform gold. It goes on a massive explosive run for a short period of time. Some analysts have compared the leading primary metal to Bitcoin, the largest cryptocurrency by market cap, and silver to Ethereum, volatile and undervalued, but offering the chance of a greater run for investors who time the market correctly. What do you think about the interview? Do you think we will get a reversion of the gold-silver ratio to its historical levels? Please drop your comments and observations in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications for more videos on silver, gold, and copper. Thanks for watching.